Good afternoon, ladies and gentlemen. My name is Victor van Hoorn. I'm the Executive Director of Eurosif, the European Sustainable Investment Forum, and I would like to welcome you all and thank you all for joining us today for what is the first edition of a monthly sustainable finance update call that we will in the future be providing to our members, the SIFs and their members, so yourselves. And the aim of which is in the space of 30 to 40 minutes to provide everyone with a very quick update of the multitude of policy discussions and developments ongoing, where we will try to make sense of it all for you and give you the opportunity to answer questions. So first of all, for today, a few housekeeping measures. We will aim to complete our presentation in 30 minutes. After which we will have the opportunity to pick up some of your questions, which you can pose through the Q&A tool or the chat function. We will read them and try to pick up on them. We have allotted, more or less 10 minutes at the end of the event today to address some of these questions. If we are unable to answer some of your questions today, do not hesitate to get in contact with us and we will try to answer to the best of our ability at a later stage. Today, the purpose of today's session is to focus predominantly on all the announcements that came out last week from the European Commission and to go one by one on several elements of the package and provide a bit of clarity on those. And that's how we structured the agenda today. Last week, the European Commission launched a package of legislative measures, which covered the adoption of the long-awaited taxonomy delegated acts, laying down criteria for the climate mitigation and climate adaptation objective, a legislative proposal on corporate sustainability reporting directive, which is the new name by which we need to refer to what we all used to call the NFRD or non-financial reporting directive. The Commission also unveiled an important set of delegated acts amending MiFID II, particularly to clarify the concept of sustainability preferences of clients, as well as made a few targeted amendments to the delegated acts on the UCITS and the AFMD regulation around sustainability risks and principal adverse impacts. If I turn to the Taxonomy Regulation first, I think we have seen, you will all recall that in December, the European Commission had unveiled a set of draft rules laying down the technical criteria for a whole range of sectors covered by the climate mitigation and climate adaptation taxonomy, which essentially aim to identify how certain sectors of the economy are potentially making a contribution to those 2030 as well as 2050 climate objectives. Following the publication of those draft rules, which were open for consultation, the Commission had received a unprecedented amount of responses. Around 48,000 stakeholders expressed a view on those, which is for people operating in the the Brussels bubble is a number you rarely see on a Commission consultation. The Commission is sometimes quite happy if it has 500 to 600 people responding to its consultation. So that number was quite gigantic. What we saw then is in the process between the Commission receiving that input in the consultation and the Commission having to actually come out with a proposal, because in December we saw only the draft proposal, we saw a lot of political jockeying and pressure with different member states making statements in the press, writing letters to the Commission that were reported in the press, certain stakeholders also raising issues around the way certain sectors of the economy were treated, whether their sector was contributing to the climate objectives, a lot of debate around the thematic of transition. How do we get the economy to transition? Essentially what happened is, you look at it more closely, is that a lot of the sensitivities around the taxonomy probably came from 3 points. First, what it would mean for companies in certain sectors access to private finance. If they wanted to go out in capital markets or in banks, what would mean, what would be the impact if their sector wasn't considered as either being sustainable or a transition or enabling activity? What would be the impact on the access to finance? The second major issue here, particularly for, I would say, some of the European member states, was particularly the question of how is the EU taxonomy as a policy tool embedded and therefore impacting other European policies, particularly when it comes to public finances and the use of public finance for certain policy objectives. We have seen, for example, that the use of the taxonomy was debated in the context of the Next Generation EU and the investment plan for Europe and the European budget post-COVID to usher a recovery. And finally, the third major point was the allegation by some stakeholders in member states that when you try and define whether an economic sector is sustainable or not, and you have a technical discussion on that, you are essentially running policy discussions which are very similar to discussions that are occurring or likely to occur in other pieces of legislation covering other sectors. And to give you an example, we know as part of the EU Green Deal this year that the European Commission will launch a number of proposals revising a number of pieces of legislation regulating the energy sector on renewable energy, building isolations, the European emissions trading scheme. And some of the stakeholders were afraid that by agreeing or reaching a consensus on what is sustainable in taxonomy, you will already have decided the outcome of the policy discussions in the context of these various measures. I think these were the three main issues that made the process very difficult. The Commission had the unenviable task of trying to find a political compromise, to take a decision on certain sectors, how they were treated. The objective here being that when it comes to delegated act, the Parliament, the European Parliament and the Council, representing the member states, the EU member states, have to both not object to the delegated act. It's very important. There's not a majority in favor, but this is a majority that has to be against. If there's no majority against, the delegated acts are adopted, which at the end of the day, you usually see different stakeholders, different members of parliament or member states trying to find the spot where they predominantly can live with the outcome of the proposal by the Commission. I think main takeaways from the announcement last week on this point is that some of the major contentious issues around the treatment of nuclear energy, around the treatment of natural gas, around the treatment of the agricultural sector in the taxonomy, those decisions have essentially been carved out of the proposal and are being delayed to a later stage. So I think that means that those discussions have not yet been decided and will probably be settled at a later stage, meaning that it seems the European Commission is quite confident that it will be able to gain non-objection from the two institutions to reach an agreement. I would here draw particularly to attention as well to the treatment of the bioenergy and forestry on those legislative proposals. We have seen civil society organizations very concerned about the way sustainable is defined for those two sectors under the taxonomy. And as a result, you have also probably seen that a number of those organizations that are currently part of the EU Sustainable Finance Platform advising the Commission have threatened to leave or to suspend their participation in awaiting the outcome of the process. I think here it's important to recap then what we can see in terms of policy activities over the next couple of months and try to untangle the complicated instrument that's called the taxonomy. In terms of political developments and policy developments we can see over the next months, we will see in June normally the European Commission make a proposal again for delegated act on Article 8 of the taxonomy. Article 8 is the provision requiring certain companies currently subject to the non-financial reporting legislation to disclose the alignment of their business in terms of revenues, capital expenditure, and operational expenditure with the objectives of the taxonomy. So a vital piece of information for transparency for financial market in terms of data of investee companies. Also vitally, as most of you will know, a vital piece of legislation to ensure that financial market participants subject to the Sustainable Finance Disclosure Regulation are in the future able to report themselves on the alignment of their portfolios with the taxonomy. Separately, and that is a new announcement from last week's announcement, we will see probably in the third or fourth quarter of this year a new delegated act, which this time will cover the topics that were not addressed in the current proposal, that is agriculture, nuclear energy, and natural gas. Here, to pause for a moment and observe that this, I think, from my perspective, this timeline is hard to dissociate, particularly from, for example, a development like the elections in Germany that we will see in the end of the year in November, where, as indications currently are, we may see a different government after November with a different political color, probably a more prominent role for the Greens, which means that the position of Germany as a member state on an issue like natural gas may turn out to be different than it is currently. So I think this political dynamics, I think, also play a role in that. And still in parallel, we're expecting also by the end of the year, a separate delegated act. This time, the delegated act will cover the 4 remaining environmental objectives not yet currently addressed, on which the EU Sustainable Finance is currently working. So appreciate it's complex, appreciate there's a lot of developments at the same time. These are all tracks running in parallel. They're separate procedures, but obviously they're interconnected in terms of the policy and the politics around it. Maybe moving on to the second big announcement of last week's package, the Corporate Sustainability Reporting Directive, which is the new name by which we need to refer to the previously called Non-Financial Reporting Directive. As we all know, to operationalize and make effective a lot of the sustainable finance agenda, be it the SFDR, the taxonomy, or the EU Paris aligned and climate transition benchmarks, we need much better quality information, comparable information, verified information from investee companies. That is the main idea behind this proposal from the European Commission. Here to note, this is a legislative proposal, not a delegated act. So here the procedure is that now both political institutions, the Council with the Member States and the European Parliament, will both over the next couple of months have to develop and craft their own position on the Commission proposal, which their position tends to make different choices and tends to amend the proposal that the Commission has made. At a later stage, once both institutions have reached an agreement between themselves, then we get what we call trilogue negotiations. The Commission, the Parliament, and the Council sit together and reach a political agreement all together on the proposal. Maybe moving on to some of the key highlights from that proposal. I think from our perspective, first of all, famous principle of double materiality in reporting, focusing on the impact of sustainability, ESG factors on companies, as well as focusing on how those companies are impacting the environment and sustainability issues more broadly. That principle that existed in the NFRD directive is very much present again and reiterated as a cornerstone of any EU financial legislation on reporting by companies. Second major change, the scope. One of the issues of the initial NFRD legislation was that the scope remained limited and quite a few companies were outside of it. As a result of that, we are now seeing a scope that is more ambitious, the result being that every publicly listed company on EU regulated markets in the EU will now have to report under the CSRD, regardless of its size. So any company on public markets will have to report. Separately, private companies, companies not listed on regulated markets, will still have to satisfy the test of being a large company, which means out of the criteria around size of revenues, size of balance sheet, and size of employees, if you satisfy 2 of those 3 criteria, those companies will be in. The question becomes now the major change is that the number of employees threshold has moved from 500 to now 250 employees to be a large company. If you read the Commission proposal, you see that the estimate is that we are moving from a reporting universe of more or less 11,000 companies in Europe to now a universe of 49,000 companies that will report under the new proposal. There will, however, be specific attention to SMEs in that they will, listed SMEs will have a delay of 3 years to start reporting, giving them more time to adapt. And SMEs that are not listed will only be subject to non-binding guidelines. That means it will be their choice as to whether they report and what they report for the outside world. I think it's fair to say in our assessment that the issue of scope, and particularly the proportionality for SMEs, is likely to be one of the key political dynamics in the negotiations, both in the Council as in the Parliament. And so I think fair to say that at the end of the process, the scope might not be entirely identical to what we are presenting to you today. Next important point, European Sustainability Reporting Standard. It's quite clear following the work from the EFRAG on its report to the Commission from February, as well as obviously from the past diagnosis of the NFRD, one of the key points missing was more detailed rules on how company reported so that you could enhance comparability. The CSRD proposal makes clear that the Commission will be mandated to adopt sustainability reporting standards via the form of delegated acts. Those delegated acts will have to take into account the technical advice received from EFRAG. 2 points here to identify as interesting. One, those standards will have to very clearly ensure alignment with existing initiatives. So there's a clear reference to the SFDR, to the taxonomy, to the climate benchmarks, as well as to potentially in the future eco-label and green bond standards. So there will be alignment in that this sustainability reporting standard has to cater also to the reporting requirements of financial market participants, and we have to ensure we get the information from investee companies. And final point to note is those standards will have to take into account relevant developments, including developments of international standards. It is not quite clear at this stage what the relationship will be in the future between a European sustainability reporting standard and efforts at international level, such as what we can expect from the work being done by the IFRS Foundation. Final point to mention here on the reporting content. As we said, double materiality is a cornerstone, which means that companies will be expected to report on the principal adverse impacts of their operations and their value chains. There will be particularly attention to the question of climate change around particular statements by companies around net zero or commitments, or how their business and operations align with a 1.5 degree scenario as foreseen by the Paris climate agreements and the EU climate law. And interesting to note, this will be published as part of the management report. So the legislation very much aims at ensuring that sustainability information sit at the core of reporting by companies and is no longer seen as a separate issue. And finally, there will be the debate about verification and assurances of that information provided by companies, and how far that needs to be audited, verified, and assured, and if so, which level of assurance. Are we talking about limited assurances? Are we talking about reasonable assurances? I think this is something we'll have to see how it evolves over the next couple of months. Moving on to the next agenda item. Of course, the taxonomy got a lot of coverage. CSRD was also a major announcement. But in parallel to that, there were a number of proposals adopted amending existing delegated acts or legislation under a number of existing financial services regulations. And I think it's one that everyone was eagerly awaiting to get clarity. First of all, on how to define sustainability preferences under MiFID II for investment products and under IDD, the Insurance Distribution Directive, for insurance-based products with an investment component. And there, just as a reminder, the Commission had consulted last year in June stakeholders on a proposal, had then taken on board the feedback received, and therefore last Wednesday published their new proposal, which is different from the version we had seen in June last year. And essentially, the sustainability preferences definition is very important because it features prominently in the suitability test. The suitability test, which is there to ensure that clients are, are given financial products which match their needs, their risk profile, and now the novelty will be that it also needs to match their sustainability preferences. And here, the way the Commission has proposed that the legislation operates is that that the client who expresses sustainability preferences has to tell his advisor about it and has to see how, with the advisor, how the financial products can match those preferences. The proposed definition distinguishes here between 3 different categories of products that may meet sustainability preferences. The first category will be products that display a certain alignment with the taxonomy. The client will, together with his advisor, have to identify a threshold for which he feels that taxonomy alignment of the underlying investment portfolio matches with his degree of ambition. It will be interesting to see how it works in practice between the expectations from investors that have strong sustainability preferences and in the actual levels of alignment that we may observe in the market once financial market participants start to report on those rules. I think it's fair to say we may at the beginning see a slight discrepancy between those expectations. The second category of products will be products that have a share of sustainable investments as defined in the SFDR. Here, the client will be expected to be able to understand the notion of sustainable investments in that specific context, which obviously has a slightly different connotation than the notion of taxonomy aligned. Because to recall, the SFDR definition of sustainable investments covers the do no significant harm principles, but looks at all the E, S, and G questions, whereas the taxonomy currently focuses a lot on the E and a subset of the E, which is climate mitigation and adaptation. So I think this is something important to bear in mind. And finally, the third category of products will be products that consider principal adverse impact indicators. Here, our interpretation is that this refers to particularly Article 7 of the SFDR. Under that provision, at some point, financial market participants are supposed to indicate whether the product does or does not consider the principal adverse impact of its investment decisions on sustainability. This obviously refers to the SFDR reporting requirements on principal adverse impact indicators under Article 4 of that legislation. So these are essentially the way that the 3 categories will operate. It is fair to say that this is quite mechanical and that at this stage, we can, with a reasonable degree of certainty, say that that proposal will at a later stage be complemented by guidelines to give a bit more clarity on how those different bits of the advisory process have to interact with each other, and how we ensure that that process actually delivers on the outcome for end clients as was envisaged by the legislation. Final point to mention, on the package of the 21st of April, we also saw changes to UCITS in AFMD technical rules. And here, our analysis that the rules seem very similar to the version that was consulted on last year by the European Commission. Key highlights for us here are the fact that once these delegated acts are adopted, the expectation will be that all products falling under UCITS and AFMD will be required to take into account sustainability risks in the so-called due diligence requirements. That is the way that they select and then monitor the investments in their investment portfolio and how those investments align with the investment objectives. And so therefore now also how those investments are taking into account or will perform in the context of sustainability risks. And final thing here to note as well is for UCITS and AFMD entities that are also required under Article 4 of the SFDR, that is, are required under the SFDR to report on principal adverse impact indicators. For those vehicles and products, there will also be a requirement from now on to take into account those principal adverse impact indicators similarly in their due diligence requirements, and therefore the way they select and monitor on an ongoing basis the investments in their investment portfolio. So while these changes are quite technical, they're quite fundamental in a way to ensuring that the EU Sustainable Finance Agenda is implemented in an ambitious way. Finally, last highlight for us of the last couple of weeks and the next couple of weeks ahead, we have a consultation ongoing under the SFDR by the European supervisory agencies, ESMA, EIOPA, and the EBA, that are on the issue of taxonomy alignment. So how certain products, particularly financial products classified under Article 8 or under Article 9 of the SFDR, how they will satisfy their obligations to report on the alignment of their own investment portfolios with the taxonomy at a later stage. There, the consultation runs until the 12th of May, after which those three agencies will be expected to report in the course of June to the Commission on any changes that need to be made to the set of regulatory technical standards that have been submitted in March by those agencies. Key issues there in that process, the ESAs are in favor of amending the proposed rules rather than creating a separate rule book. There are questions around the choice of taxonomy alignment indicators. Is it the turnover? Is it the OPEX or the CAPEX of the underlying companies in the investment portfolio? It's the combination of both, if it's only one of them, so that is still up for discussion. There's a question as to whether that needs to be the same or different, whether you're talking about pre-contractual disclosures on the one hand, or periodic reporting on the other hand. And finally, there are questions that were already for the avid followers of policy developments. You will see that some questions that are also relevant have been already in a way addressed by ESMA in its advice on Article 8, technical advice in February on taxonomy alignment. It has namely the question of in how far in the calculating taxonomy alignment you take into account sovereign bonds, or how do you take into account other asset classes for which taxonomy assessment may at this stage be challenging. So these are the key developments over the last couple of weeks, and looking ahead what we can expect. So that concludes our presentation for today. Please, if you haven't asked questions yet, feel free to raise your questions in the Q&A, and we will answer them. Picking on the first question we received, how, in the context of CSRD, will proportionality for SMEs be safeguarded? To answer that question briefly, I think it is, in our experience of several years of following these discussions in the EU, the question of the treatment of SMEs and the proportionality in that context remains always one of the most complicated issues politically to agree on. Both, as I said, in the Council, many member states have large parts of their economies that are where SMEs play a critical role, and there, what's interesting to see is that you tend to always have across pieces of legislation the same dynamic emerge. So, as I said, without any guarantee, but it's probable that the current scope of the CSDR, as contained in the proposal, is likely to evolve as the negotiations develop in the Parliament as well as in the Council. Another question we received is, will first rules be the delivery date of the final level 2 text for the SFDR? That is a very good question. I think there's a little bit of, there's not full clarity at this stage on the process for adopting the final level 2 text of the SFDR. We were, to be honest, we were expecting some announcement last week, but on the SFDR front, it has been relatively quiet. It is not clear what the timeline for the adoption of those rules is, but it is clear that at the latest, we should see something in June when the latest amendments to those rules coming from the taxonomy alignment process will be finalized. Finally, I see another housekeeping question. Yes, we will distribute the slides after the event to all participants. Looking at the next question, what are the news about the social taxonomy? So on the social taxonomy, that is one of the work streams of the EU Sustainable Finance Platform. Our latest information is that we should see the platform more broadly, so not only on social taxonomy, but on other issues on which they're working, that we should expect mid-May or end of May a consultation whereby they will publish intermediate reports of their thinking on social taxonomy, and then there will be an opportunity for stakeholders to comment on that. Unlike the the 4 environmental objectives for which we are still expecting a delegated act, the social taxonomy is currently not foreseen by the legislation on the taxonomy regulation. So there, the European Commission will have to take a political decision whether it wants to amend the legislation to create a social taxonomy. So we will have to see how that plays out in terms of the policy priorities and agenda of the Commission, which we should expect, in the course of June with the new EU Sustainable Finance Strategy. On the question of what can happen if the complementary delegated act for nuclear and gas is rejected, that's a good question. They will, once the Parliament and the Council reject delegated acts, usually the Commission has to go back and think how they will treat the issue. The immediate consequence is that if the delegated is rejected, for taxonomy purposes, neither nuclear nor gas can be considered as sustainable or in transition. So the regulatory treatment of those sectors under taxonomy is not clear. But I think this is very speculative at this stage, how the Commission would deal with a rejection if it occurred. Next question received, according to the MiFID II reform, it will be up to the advisors to set the percentage of sustainable products to be in client's portfolio in allocation with its sustainability preferences. That is, I think there is where the proposed text last week around sustainability preferences was not entirely clear. If we look at the preambles, as well as the explanatory part of the proposals, our understanding is that the client will be expected to indicate his level of preference, and then the advisor will have to translate that in the availability of products that matches those thresholds. But I think I understand where the question is getting at, and I think we wouldn't disagree with the fact that there will maybe be some concerns how you operationalize that and how you ensure that clients do get their preferences matched with ambitious products. Final question, we see if the SFDR RTS published in February will be adopted in June, what then happens with the taxonomy aligned RTS? It could be October, November before they are adopted, which is too late to prepare with not enough certainty around the final templates. Any sign of practical guidance transition period? I think this is all again speculating a bit about future developments. If you look at the ESA consultation paper on taxonomy alignment, at the end of the day, the proposals made by the ESAs are quite limited. So the changes are predominantly indeed in the templates and not so much in the rest of the RTS, which means that it may be a case that those amendments are slotted in and then adopted with the rest of the RTS quite quickly after June. But yes, we may see in the latter part of the year operational challenges to report on the taxonomy alignment, depending on when the text is finally adopted. And I think another issue to flag here is that there may be questions also about the date of application of the SFDR RTS, which will obviously apply to pre-contractual disclosures, but whether the rules on periodic reporting should kick in at the same date or should be delayed, bearing in mind that they always have a look back at an observation period in a year prior to the publication. So you'd essentially be asking firms to report on a year where the RTS didn't apply. So I think it's not the end of that conversation. We'll probably see some developments around that in the future. We have come to the end of the questions asked in the Q&A chat at this stage. Do let us know if there's any further questions by anyone. Since we are seeing no questions popping up either in the Q&A or the chat at this stage, we'll take that an assumption that we've been quite clear in our updates. So I want to thank you very much for your first participation. As I said, this is the first of what we hope to be a monthly update that we will be providing on current developments and policy developments in the area of sustainability and sustainable finance. Also, please do not hesitate to get in touch, give us feedback if you believe a different format, different topics, or different issues should be addressed. We look forward to welcoming that as we are, in our own idea, developing this format. So for today, thank you very much. I wish you a pleasant rest of the day. It's very sunny here in Brussels. I hope it's very sunny where you are. Wish you a good rest of the week and look forward to engaging with you all very soon again.